Guys, the property market will collapse if this happens. This is no clickbait. This is in fact me showing the dark side of property and real estate investing, because I feel like now the community has grown to this level. Anyone that's new and doesn't have context and stays for about 2 minutes of my videos, they need to know the danger of investing in a market like we are in right now. Keep watching. Hey guys, my name's Ravi Sharma and I'm the founder and buyer's agent here at Search Property. Thank you so much for watching another episode of Search Property TV. If you're new here, smash that subscribe button and stay for the context, because essentially it's not just about clickbait titles. It's not just about listening to 2 minutes of someone's video and going, oh, this is financial advice. It's not about that. It's about getting educated, especially during a time of such uncertainty, where I talk about in all of my videos about passive income and, generate more wealth and increase your income through side hustles. It's also very important to know that we are in a really weird time where property prices are going up and a lot more than inflation actually claims to be. So what does this mean? Well, there is something that could happen during the next 12 to 24 months, which would in fact lead to a market collapse. Yes, okay, I talk about being bullish in the property market and I truly am. However, if this behavior continues, we are going to see the market collapse. And why you're here is because you want to stay up to date and educated about these things before they happen. I think it's only fair that I looked at one side, which is, the market's looking good, but it's also looking at the dangers and the negative aspect of this property market and how it can really affect us. Now, stay till the end of the video and I'll share with you what I think is probably a better way to approach it and how I would approach it if I was in that position. Now, before I continue, none of this is financial advice. You can do whatever you like, but if you want to learn how to do it the right way, there's a link in the description below, Confusion to Clarity online course. It's a course that I've created over the last 7 years, put it together in a 3.5 exclusive content material across 4 modules, right? So if you guys are interested, definitely go into the link in the description below. You can go and download a syllabus as well, so you know exactly what you're gonna get out of it. It's important to know where we are in the market currently and why I'm saying what I'm saying. Now, I've said a lot of inflation is coming into the system, right? Asset price inflation is pushing prices up. We are seeing headlines everywhere. You turn on the news at 6 o'clock as well. You see property markets going berserk, all-time highs. So we're in a current state of FOMO where people are missing out. We've got increased levels of competition where there's more and more people flooding into the property market. We have really, really cheap debt. So rates are really low and that allows for people to borrow more money. Now that's the current state of the economy. Now, a lot of people are going to jump into this, and this is where we find a very, very big issue. The big issue is that a lot of these headlines and a lot of this content that comes out is suggesting property markets are exploding, everything's going to go up. So what that does is it allows people to get attracted to that and go, oh,
I can make a lot of money here.
I should invest in real estate when debt is really cheap. Look, interest rates are so low. So I'm going to go and buy a house because everyone else is buying and now the prices are going up. Like,
oh my God.
It's going to get higher. And bam, that's where it's going to happen. Where the market will collapse. We will have a significant correction and there's nothing that anyone can do about it. Because essentially, if we have a lot of people that are really uneducated, that are looking at 2-minute clips on YouTube, or they're looking at, what's happening on the media headlines or reading an article about buy anywhere, it's going to go up. Those are the people that come into the market thinking real estate's easy, right? I can just buy a house, buy anything, and then be able to make money really quickly. And that is when we see the problem, because it's these people that come into the market actually don't understand why property prices are going up. They don't understand quantitative easing. They don't understand interest rates and why interest rates go up, but they don't understand why they go down either. And it's a combination of all these things and misleading information that's out there that they end up getting roped into buying an investment, right? Buying their home, which they think is an investment, but is a liability. And they are the ones that suffer when changes occur in the economy. Because the reality is, if you don't know why certain things are happening right now in the economy, you probably shouldn't get into high levels of debt by buying real estate. Now, that isn't financial advice, it's just common sense. If you don't know why certain things are happening, like why interest rates are so low and Ravi keeps saying they're not going to go up for the next 2-3 years, maybe I should really find out why. And if you don't know those answers, I can tell you now, it's not a great idea to actually go out there and buy a property for yourself. Because when interest rates go up, and at some point they will, when we finally get into the next phase of this cycle, and we're a fair way away from that, but when it does happen, who do you think is going to be able to adapt? Well, people like myself who are researching every single day understand why certain things are happening and where we can predict with a high level of certainty why certain things will happen in the next 3 to 5 years. We're the ones that are going to adjust and be like, well, the whole idea is buy low, sell high. That's across every asset class ever, right? Whether it's cryptocurrency, real estate, stocks, that's the whole idea. Now, getting emotional about a purchase is the number one problem you have. Now, if you go and purchase a house to live in, that's an emotional purchase, right? Now, I'm not going out here and saying, oh, don't go and buy your own home. None of it's financial advice. However, think about it. You don't buy stocks because you're like, oh, I like my Apple phone. I mean, some of you may, but it doesn't really make sense, right? If you don't look at the fundamentals of why that asset class is going to go up, you shouldn't be investing, right? And it's people like this herd mentality, this FOMO nation, this FOMO feel, and I feel like the media has a huge part to play in it, come out and they
say, no, property prices are going up.
I don't know what you're talking about. Those are the same guys that 12 months ago were saying the markets are going to go down. Now they're saying markets are going to go up. Stay consistent with who you listen to with context. What I mean by that is all this time I've been talking about why real estate markets will go up, but there are certain markets that will fall. There are certain markets that will correct themselves. I am also coming out here and saying, hey, be aware that this isn't going to last forever, that this opportunity that arises is not uniform. It's not that I bought a house there and across the street, that should perform the same way as this one. It doesn't work like that. And the people that get really burnt are the ones that get in there because they hear some uncle talk about it, they hear some cousin talk about it who have no idea how to do this. If you are looking to do it the right way, there's a course in the description below. Go and invest in yourself. When you're going out there and purchasing property for $400,000, $500,000, $600,000, it would be pretty smart to actually educate yourself as to why you're doing it and why you think it's a good idea. Because you might do it, and then there's 5 others that do it, and suddenly interest rates do go up, or the changes in wages go, and there's a difference in how they're going to assess borrowing, and we suddenly see a shift of 15% in the property market, which we could definitely see. What happens then? Are the people that knew of this coming, that were actually going about it the different way by rent vesting, and I'll talk about this a little bit more, are those people going to be affected, or the people that went in there thinking, well, property prices will never go down, I should just buy, it'll continue going up, this will be fantastic? Are they going to suffer? The truth is, most people that are buying houses for themselves to live in are actually relying on one income source being their job. Now, what happens when interest rates go up and their business that they have no idea has actually borrowed funds, and now those interest rates have gone up, and effectively that means their cost of borrowing goes up for the company. The company is now reporting losses instead of profits. They have to let go of staff. So they let go of you. And now you don't have a job, which is the one source of income you rely on. Yet you bought a house because you thought property prices were going to go up. But now we're seeing a correction because just like you, there's 5 others that decided to do the same thing. Now they can't afford to make their mortgage repayments. And that leads to you wanting to sell the property and be a mortgagee in possession. Now I know that's an extreme case. But as much as I'm confident in the market, I know that there are a lot of new people coming to the channel and the community is growing with really cool people. I appreciate that and I'm super grateful. But I also think it's a duty of care to at least explain that there is a different side to this, that there is a darker side to real estate. And I'm not saying this to scare you, but in fact make you realize and give you context and perspective that it's not just about roses and this is amazing and property prices will always go up because Ravi said so. It doesn't matter what someone else says. You need to be comfortable with why you're making that decision. If you don't understand these things and you haven't educated yourself well enough to do those things, why in the world would you be now attaching your name to debt of $400,000, $500,000, $600,000? Because I can tell you, if you're just focusing on one side, which is, oh, I've got this debt and I've got this asset, look at my house and it looks amazing. If you're just focusing on that and you have one source of income, I would be scared right now. Because if something were to shift, and they can well shift any time in this economy, is when we have uncertainty and that shifts, the momentum shifts and the confidence changes, then you are going to be in the firing line where you can't afford to pay your debt down. And that is going to be debt that carries over for the rest of your life in the form of, consequences and whatever that looks like. At the end of the day, this video is not about, saying the market's collapsing and this is why it's going to collapse. It's more about going, you need to now get accountable for your education. You need to get accountable and be self-aware for why you were doing certain things and not just listening to all the puppets out there, being media headlines and going,
hey, I should just invest because property prices are always going to go up.
The ugly side to this is very ugly. And I feel like, me being in a position I'm in now where I've got a bit more eyes on myself and, on the channel and the community's grown, there's a lot of newbies that are coming in and a lot of people that I speak to as well where they truly believe the market could never collapse. It could never change. But there are people out there that are buying the wrong type of properties. And this is what I'm talking about, is there is a way out. There is a way to better take advantage of this opportunity. And that's rent vesting. If I was to go and rent vest, right, and I'm just looking at a simple scenario here, and I want you to look at this without the emotion of,
oh, I don't want to pay rent because that makes me poor.
Don't look at it that way, right? Look at it this way. If you now go and purchase a property and that has positive cash flow and the cash flow takes care of itself, right? There's tenants in there and they pay for the rent. Well, if you now have that, that is an asset. You now have your job and the job allows you to save more money, which means you insulate yourself from any, corrections in the market. You have that sitting in an offset account. That allows you more choice because technically you could still do whatever you like. You still pay rent, but that's just an expense, a weekly expense. And you're able to grow an asset and then possibly take up another asset and you grow up that portfolio. Versus going in and purchasing a house with the income you make to now buy this house that you live in. And it's not in the ideal area because you thought you liked the area and that's why you wanted to live in there. And are taking the money you make from your job and you're plugging it into this mortgage and you think it's an asset. But what happens if the market corrects? You're in a shitstorm because now the property prices have gone down. So you can't just, sell it. But you're also on this side where if your job goes, you've only got one income. This is where building a portfolio is important, but also investing across different asset classes. It's just important to hedge your bets. It's just important, common sense really, to go and look and diversify your risk because as much as I'm all about invest and increase your income and wealth creation, it's about lifestyle choice. I'm not going to give up my lifestyle just so I can purchase an extra property, right? If it's a small change that I need to make, yeah, I'm willing to do that because I can see the long game. But if I'm going to go and buy a house for myself and now I have to fork out an extra $500-600 a week, that's affecting my lifestyle and that affects my mindset. And that means I'm not able to go to sleep at night if I have a problem at work. Now, I know a lot of you can relate to this because I have strategy sessions and there's people that literally tell me this.
Hey, I've bought my house, but now I don't know if I'm going to have a job.
Why did you do that? At the end of the day, it's who we listen to and listen with context. The market can collapse and don't think it's just insulated from everything. Yes, housing has gone through a massive upswing. It will continue having this upswing, but not everything will grow. It's very important. Not all locations will grow. And within those locations, it's the type of asset you are buying that will either grow or not grow. There are markets out there that are currently falling, but no one's talking about that. And this is where context is key. If you want to get educated and do this the right way, go into the link in the description below, enroll yourself in a course online, Confusion to Clarity. Please do it. It just makes a lot more sense when you have clarity. You can download the syllabus for free, find out what's actually involved. And if you want more education at scale, then definitely subscribe to the channel and I'll catch you guys in the next video. Thanks guys.